thank you for watching this latest IEFA conversation series. My name is Karin Strohecker, and I'm the Chief Correspondent for Emerging Markets at Reuters. I'm speaking today to Carmen Reinhart, Chief Economist at the World Bank Group. Carmen, thank you so much for joining me here.
Thank you for having me.
Carmen, there's a lot of optimism in the air at the moment about that vaccines will be able to get the world economy back on track. But we also have seen the latest data on debt levels growing to absolute records, debt to GDP ratios blowing out. Especially in many developing economies outside Asia, we still see growth, economic growth, still lagging quite a bit. How fragile do you think, especially developing nations, are still at this stage in the recovery? And how concerned are you that there might be lasting permanent scars from the fallout of the pandemic?
Well, that's $1 million question. Permanent is a very tough word, but lasting damage is certainly being inflicted by this pandemic. Particularly to emerging markets. Emerging markets also, I would qualify my answer, they encompass many different regions, many different income levels. But I think the lasting damage is there. Importantly, one has to remember that most emerging markets don't have the firepower that the advanced nations have to cope with the adverse effects of the pandemic. So they don't have the capacity to do the counter-cyclical policies that we've seen in the US, that we are seeing in the US and other wealthier economies. That is definitely something that will play a big role on the speed of recovery. You also mentioned vaccines. And again, one has to take the issue that news is good. World Bank is very active in that dimension, but let us not underestimate the speed at which far-reaching access will occur. Those are headwinds.
You spoke of financial firepower, and of course we are coming towards the G20 meetings, and the G20 has played a crucial role in all of this. We will have the finance chiefs speaking in very shortly in the days to come. We'll have the leaders speaking very soon. There are already some initiatives in place that are designed to help the poorest nations. We have the DSSI initiative. We now have the common framework as well to help reduce the debt stock. How optimistic are you that we are on the way to have a better global financial architecture to resolve debt crises, that we are at the point where we're getting this?
Look, Karen, the honest answer is I have very much a let's wait and see. The G20 has taken very important steps in trying to help the pandemic hit poorest countries through the DSSI initiative. But we also know that the DSSI didn't fully deliver what we had hoped at the outset, that the private sector involvement to the date is yet awaited. Now the next step is how will the common framework, which is more lasting, offers the possibility for more dealing with more lasting debt relief for those that are in distress, and perhaps debt reprofiling for those that are not in distress. Again, I take a wait and see attitude, because in the end, it is creditor participation that will matter in how much can be expected in terms of actual relief. And let me say this, as you know, I'm a big student of history, and creditors in the past have taken a very long route to offering significant debt relief. I hope we're not on that path, but I will reserve my judgment on how successful these initiatives will be when we look in the rearview mirror.
We have already seen 3 countries apply for the framework, to participate in the framework: Chad, Ethiopia, and Zambia as well. Do you think we'll see substantial progress being made in these test cases this year, in the months to come? What is your timeline on when this could bear fruit, or hopefully will bear fruit?
Well, the 3 countries are all countries that are already in debt distress. Their debts are not sustainable, one form or another, or else, like Chad, face very challenging liquidity problems, big debt payments coming up. So again, it goes back to, can a unified framework really act as a coordinating device for significant, important debt write-offs? And we will see when we will see. In the past, a common recurring pattern has been that there is some effort to reduce debt, but often it is not enough. And so countries have to go back to the drawing board to try to resolve the problem again. And we get serial restructurings. And so I'm hoping that indeed the common framework will help achieve more meaningful debt reductions in the first round, but it will be a challenge. I do not think we should underestimate the challenge of coordinating what is a very diverse creditor base at the moment.
And speaking as an economist, you're looking at those numbers very closely. 3 have already applied for it. There is a number of other countries in debt distress. Do you expect, or how many do you expect to follow suit this year to apply to that framework?
It's a very important question. And I think one cannot ignore that credit ratings, have reacted to those applications. I think Ethiopia's application was met with a quick downgrade to CCC, which is high probability of default. And so I think countries will be will weigh that in very importantly, especially those countries that may be still hoping to access private capital, to tap capital markets. I think the prospect of being downgraded is going to be a deterrent. However, having said that, I think as the effects of the pandemic last longer, more countries will be in debt distress. And I would note that the financing conditions, the low interest rates, the very high liquidity, have created a very large appetite on the part of investors for this high yield debt that many of the developing countries and emerging markets are offering. That doesn't eliminate the problem. It may delay it. It may slow it down. So, keep those 2 elements in mind, that we may see slower entry because of favorable financing conditions. We may see slower entry to applying for the common framework because of fear of the rating downgrades.
And putting it under the G20 common framework has seen China, India, and Turkey, who are all in the G20, come into that fold to help that process. The signs that you have seen so far on engagement from especially China, who's by far the biggest lender to some of these countries, do you think that's been enough? Is China showing enough engagement? Are you hoping they fulfill the expectations that we need to see from them?
Well, China is by far the largest official creditor. To put it in perspective, it's bigger than the Paris Club official creditors combined. So what they do is critical. And as I said, I reserve judgment to wait and see how it unfolds. So far, I think an area that has been, in the context of the DSSI, one area where there have been less involvement on the part of China has been the CDB, the Development Bank debt. Of course, under the common framework, public and private creditors all need to participate. So certainly we will wait and see on how much China and India and Russia and others that outside the Paris Club sphere come in. But I think we also have to wait and see how the private sector comes in, because, for instance, in the case of Zambia, also in the case of Chad, important debts are owed to private creditors. So it's all rolled into one.
Is it paramount for these countries to preserve market access?
Is it paramount to have market access? Well, market access is hard to win and much easier to lose. So I do very much sympathize with countries that are trying to preserve their market access. But again, I think a recurring theme from the work that I've done with Vincent Reinhart earlier last year has been, do not confuse rebound with recovery. Per capita incomes in many of the poorest countries will remain substantially below what they were pre-COVID. And so, I think that sluggishness of true recovery will be with us and will be a factor on driving countries to seek debt write-offs, to seek debt recontracting.
Another item that's been high up on the agenda are the IMF special drawing rights. Looking at it from an economist's viewpoint, how far do you think this will go to help countries shore up their economies, or get their FX reserves back into shape, or help them shore up what needs to be shored up? There is talk of something between 500 billion to 1 trillion. So there is quite a wide range. How far do you think this can go?
It will certainly help substantially, because I think one of the big characteristics of this pandemic is the far-reaching effects. So if you look at IMF lending, if you look at World Bank lending, indeed, if you look at the lending of the multilaterals, the outreach is very vast, with well over 100 countries approaching the multilaterals for one form of assistance or another. So making the pie bigger does provide the additional firepower that is so lacking in many of these countries to cope with providing social safety nets, with shoring up their health and education systems, all badly hit by the pandemic. So in the end, how much the SDR increase will be channeled, it still remains a question mark, but it's certainly, I would say, it's a very important step in the right direction.
Are you expecting we'll see that still this year?
Look, I think the change in administration in the US will be a major catalyst. And I think that there is much more willingness to go the route of an SDR increase than we had seen through 2020. So it could happen quite quickly. Indeed, if you look back to the last increase around the global financial crisis, it was pretty expedient.
In developed countries, a lot of focus has been on using this crisis to spark a green recovery. We haven't seen the same impetus towards developing economies, or many developing economies, especially the poorer ones. How do you see that push for green intersecting with debt relief? Should there be an intersection, and should those two come as a package?
So in these things, well, first of all, the big question, I think there are enormous initiatives at the bank, at the IMF, and in the international community at large to make it happen, to make the recovery from COVID much more green, much more inclusive also, because I cannot emphasize enough the regressive nature of the COVID shock. It's hit the most vulnerable within countries. It's also hitting the most vulnerable countries as well. So I think the good news is, of course, that there's great impetus to make it work. Again, I have to say that a lot of this will have to be worked out on a case-by-case basis, because I think for countries that are facing unsustainable debts, already in debt distress, some of the countries that you mentioned earlier on that have already applied, I think the initial focus is on dealing with the significant debt problems. I think for the broader array of countries that are not in debt distress, I think there will be capacity to shift the pattern of debt, shift the borrowing to channel it to greener projects. As I said, I think there is great cohesion around the international community on that score, including the bank. Very important, including the bank.
Multilateral institutions haven't had the easiest of time in the past few years. There's been an erosion of trust. What do you think institutions like the World Bank can do or have to do to rebuild trust?
Well, look, I think that I would say that let's first take stock of what has been done. And I think, one has to, and I said this before I joined the World Bank, that at the global level, the response of the multilaterals in response to the COVID shock, in terms of the speed of lending, the front loading, the volume of lending, also in the context of the World Bank, a very big focus on building social safety nets and more resilient health systems, I think already speak to what has already been done. I do think that at the broader level, including the WTO, which I'm very excited with their new appointment, at the multilateral level, we will see greater cohesion in the international community and a greater work being channeled through multilaterals than we had in previous years. This is not going to change a lot of, we shouldn't overestimate that either, right? This isn't going to change the fact that there are a lot of tensions, regarding the interactions with China on various fronts between the U.S., Europe, and China. I don't think those tensions are going to disappear overnight, but certainly I do think that there is more of a spirit of multilateralism, which I think will help further restore, confidence in elements, at least, of the global financial architecture, the global architecture, not just financial.
And you already mentioned the new WTO chief and Ngozi Okonjo-Iweala. We have seen an increasing amount of women taking a prominent role in helping to rebuild the global economy, being in leading roles. We have Janet Yellen at the US Treasury, we have Ngozi at the WTO, we have Christine Lagarde at the ECB, we have you at the World Bank. Does it make a difference to have women being such a prominent part of that process? And what do they bring different perspectives? How do you see this?
Well, look, we talk about inclusiveness a great deal, right? Inclusiveness in the context of, trying to reach the poorest segments of the population. But women are about 50% of approximately 50% of the population. And so I think the representation, a more balanced representation, hopefully will also lead to more balanced, more inclusive, in the true sense of the word, response to the many challenges of that are legacy of COVID. And I think we are seeing them, reaching from central banks, Janet Yellen previously, but now also Christine Lagarde, and we've seen them at now at the WTO and at multilaterals. So that's part of the definition of inclusive. I would note that I think a big challenge that the bank faces is trying, this, I've mentioned the unequal nature of the crisis. And in the report, the bank report on poverty and shared prosperity, it very much highlighted how unequally the burden of COVID, the impacts of COVID have been on women and girls. So that is a big challenge. Getting those girls back to school in the developing world is a big challenge, and good to have leaders that are attuned to that. Not that male leaders are not attuned to that. I didn't mean, but especially attuned to that.
Possibly bring the perspective to it. That might be beneficial. Thank you very much, Carmen Reinhart, for your time.
Thank you for having me.